Hello everybody and welcome back. In this video we are going to dig a little bit deeper and we're going to talk about volatility. With volatility we can change the way that we trade a system. Now what I mean by that is if we have a market where the volatility has increased, which means that we would expect higher ranges during the day. So if you look at these bars, you have kind of small high to low range, small high to low range, then we're getting bigger, back to small, big, and then you come over here and you can see you're starting to get these bigger bars on a consistent basis. Well, if you're analyzing the volatility in real time, then what you would want to be doing is increasing your stop. So for example, let's just say I'm going to trade out of this zone, and on a normal trade I'm going to enter here and my stop is going to go here and my target's going to go here. Okay, I'm just giving you some examples, but this is kind of the way I look at the market. I want a tight stop and a big target. Now, this is in a normal market environment, but let's say now we're in a higher volatility market environment, and we come to this zone. Well, you know what? I may want to do something like this, right? And then my stop is going to go way up here. Probably even need to be, up in this area somewhere like that. Okay? Well, how do we do that? So that's the question, right? How in the heck would we do that? Well, let me show you something. Here's an idea. And this is actually very similar to the way I personally trade. So I'm going to go to indicators. I'm going to apply an ATR. I'm going to apply it 2 times. The first one I'm going to use a 7 period. So what does that mean? A 7 period ATR. Well, what that's going to do is it's going to look at the average high to low range of each bar over the last 7 periods. Right? So it's going to be very dynamic and change quickly. Now, the other ATR that I'm going to apply is going to be a 200. That's going to look at the prior 200 bars. So it's not going to be real sensitive to short-term movements in volatility. So you can see the difference here. One, as we would expect, is a smoother scale. The other one is very choppy. That's what we expect. So what am I going to do with this information? Well, you can use it to set your stops and your targets. So think about this. What if every time I enter a trade, so let's say that this is my signal bar. My signal bar for me means that's the bar that produced the signal and tells me I should take action. So if I look at my signal bar and I go 1 bar before that and I just stamp it in time and I say this is the bar I'm going to use to measure volatility. I have an ATR down here of 0.959. Let's just round that up to 0.96. So that tells me that my average move is 96 cents. Coming down here, hold on one second. You know what? I'm gonna open up this data box. This is gonna give me what I need. So here you can see the average ATR on the 200 is actually a little bit higher. So we're below our 200 period average. That's okay. So what if I then use this ATR to set my stop? Right, because when it comes to trading, you want to automate as many processes as possible so that you don't have to think about it while you're taking trades. I just want a system to tell me what to do. And that's what I'm doing here. So we could take this ATR and say, I'm going to take a multiple of that. Maybe it's 1.5 times, or maybe it's 2 times. And I'm just going to set a stop at that point every time. That doesn't mean that I'm risking more, which maybe is a little counterintuitive. But if I have a $1 stop versus a $2 stop, does that mean I'm risking more money? Well, I guess the answer depends. It depends on if you're trading the same number of shares and increasing your stop, then you are risking more money. But I would reduce my share count. I have a fixed amount of money that I'm willing to risk in a trade. So if I have a higher stop, a larger stop, I'm just going to cut the number of shares I'm trading to keep my risk the same. So you could also use this to potentially set your target, right? What if I wanted to set my stop at a 1.5 times the prior bar ATR? So that would look something like this. So let's do some math. So we're at 0.95, we're 0.96, and we're going to do 1.5 times. 0.96 times 1.5, it's $1.44. And in this instance, my entry is going to be above this bar. So we'll call it 50 and a half. So 50.5 minus 1.44, it's 49.06. So I'm just going to mark this chart up real quick. So there's my entry. And 49.06, close enough, right? So that's what it would look like. So that's 1.5. Now, what do I want my target to be? Well, one thing we could start with, say if we risk $1, how many dollars do we want to make? 4? We can shoot for 4. So if we need to be 1.5 times 4, which is 6. So now we can take 0.96 times 6 is $5.76. We need to add that to our entry. That's 56.26. So now we're just going to come in here and go to 56.26. Close enough, right? Here's what that looks like then. Now, to get a better visual, I love doing this. So this is going to be our stop. So I'm going to make that red because that's a risk. And then I'm just going to copy that, put it on top here. And this is our target. So that's what it would look like. Let me get rid of these lines now. Looks pretty sweet, doesn't it? How many systems have the opportunity to deliver something like this? Now, think about this though. If we truly can build a system where I'm risking $1 to make 4, would you expect to have a super high win percentage? I mean, probably not. But you don't need one, do you? See, that was the whole premise behind what I did with Trade by the Numbers. I wanted to reduce my dependence on having to win 70, 80% of my trades. Reduce it to where I don't even have to hit close to 50% because I know price moves. The price tends to move strong out of market structure zones. I don't need to have that many winners when I'm winning $4 every time I risk $1. Okay, so that's just one thing to think about, all right? Now, here's the other really cool thing that we can do with ATR. Now, remember, our ATR is 0.96. In fact, I am going to take that and I'm going to write it up here. It's 0.96. So when you're testing a system, a couple of things that I like to jot down are going to be the zone low. So let's go ahead and get that. It's going to be off of this candle here, 48.32. I want the zone high. It's going to be off of this candle, 49.74. What was that again? Hold on. 49.74. Okay. So then the delta between those, oh, now the delta let me just get my calculator out here. Is $1.42. Okay, so those are a couple points to measure. Now I want to do the same thing with my signal bar. So my low, 49.62. My high, 50.45. And the delta, so we have 50.45 to minus 49.62, 83 cents. Now I want to get a multiple of my ATR for both my signal bar and my zone. So to do that, I'm going to take the 0.83, divide that into the 0.96. That gives me 0.86. Oh, let's label that sig bar. I'm going to call it X for multiple, 0.86. Then let's come up here and we're going to do the same thing with our zone. We're going to take 1.42, divide that into 0.96. Oops, hit the wrong button. $1.48. All right, so what does this tell us? This tells us that my signal bar is less than a 1x multiple of my ATR. Well, that's especially important if I only have a stop that is 1x of my ATR, right? Because what if I had a signal bar multiple that was 2? Like maybe this was my signal bar. Well, what could happen is my stop would just be in the middle of nowhere. Like it wouldn't even be below the low of this bar. It would just be in the middle of nowhere. And that's not a good situation to be in. And same with the zone. So this zone, the ATR, the zone is 1.4x bigger than the ATR. Well, that means that if I'm taking a trade up here, I know that my stop's going to be in the middle of the zone. I know that, and I'm sure you guys have seen this, a lot of people want their stops below the zone low. I don't personally do that. The way I look at it is I'm risking a little bit, and if price comes back into the zone and stops me out, I will take another trade. But that's where it's really important for my signal bar, at least. I want my stop to be below the signal bar, so if I get stopped out, I can re-enter. Think about it this way. If I had a really big signal bar and my stop is right here, and the zone low is down here, let's say it's down here, price comes and stops me out, comes down, never gets back to the zone. I'm sorry, this is the zone high, not the zone low. Price would never get back to the zone high, and I would miss this move. Okay, does that make sense? You might want to watch this a couple times. I know I went through this a little bit fast. The other thing that you can look at, and this is getting a little more in the weeds, is how deep did price penetrate the zone? And does it work better if you just clip the top of the zone or if you've gone through the zone? And to do that, you would just need to get the zone high to the low and the signal bar low, right? And what you would do is you would take the difference between your zone high and low, which we know is 1.4. So the zone high to low delta equals 1.42. And then we also know that our signal bar low is 49.62 and our zone high is 49.74. So you would just take the 49, keep hitting the wrong button, sorry guys. You would take the 49.74, which is your zone high, minus the 49.62, and we can see that that equals 12 cents. And then we would just divide the 12 cents. Why do I keep doing that? We would divide the 12 cents by the $1.42, which is our zone size, and that's going to equal .08, which is 8%, or 8% penetration of zone. So what that tells us is we penetrated only 8% of the zone, clipped the top of it, and went up. All right, you guys, I'm sure by now can tell that I am all about numbers, all about math, and this is what I mean when I say bringing market structure to life. This is it. Now, I just want you to think about the power of all of this, okay? Because this stuff is awesome. All right, that wraps up volatility and ATR. Hope you guys have enjoyed some of the ideas that I've put in here. And honestly, as you get into this, you're going to come up with your own ideas. I would encourage you to share it with the community, because the more that we share, first of all, the more that we share, the more we empower others. And if you have a really cool idea, I have the ability to test it over 20 years at pretty much lightning speed. That might be an over-exaggeration, but I can do it a hell of a lot faster than you can. So consider that. All right, that's it.